and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing some amount of consolidation for the frontline indices and the Bank Nifty, which is sulking today, so down around 0.7%. But we have a lot of stocks which are buzzing around within the broader market, so just keep a note of that. The likes of Manica, which is up around 11% Skipper, which is up around 7.5% Castrol India, which has gained around 9% in today's trade, and even stocks within the pharmaceutical space, Indico Remedies, GSK Pharma, Narayana Health, all of these stocks gaining anywhere between 4 to 5%. So buzzing market, stock specific in nature, but the Bank Nifty continues to sulk. We do have Rajat Bose joining in to discuss all of the queries that we have, along with Sharad Avasthi. Sharad as well as Rajat, welcome to the show. Well, before we kick off the queries, Rajat, the standard question to you. The markets, it's largely a quiet day, but there's a lot of underlying movement.
Yeah, good afternoon. Thank you for having me on the show. Nifty at 24,731, that is the current level. It is higher than the 24,686. When Nifty came back from the lower levels and regain levels above 24,686. That means the gap that was created on 5th of August, that has been fully taken care of. And once it stays above 24,700, it will gather steam. And once the next level of resistance around 24,865, if that is taken out, then the next target would be 25,080 to about 24,115. So this is on the upside, and unless the Nifty falls 24,300, there would not be much of a problem. Bank Nifty is perennially sulking. Bank Nifty, unless it takes out 50,900, that level needs to be taken out. After that, 51,300. This range of 400 points on the upside will give enough supply, and once it comes down to about 50,100, it can expect some support. So Nifty, Bank Nifty are in a different direction. I mean, Bank Nifty is perennially weak, but Nifty maintains its strength, and so does CNX IT, and also today pharma stocks are doing pretty well. Divi's, Cipla, Indigo Remedies, a lot of these stocks are doing fine, pretty fine.
Okay, all right. Well, we do have our first question now. We have Shrija, who writes to us from Mumbai, holds 400 shares of Dabur, which is bought at 630, wants to know what to do, whether to buy more or whether to exit at these levels. So 630, just about very close to the buy price, so not much of a loss. So let's get a fundamental view in first. In terms of demand trends, the Q1 update was quite positive from Dabur. So on that note, fundamentally, what would you recommend, Sharad?
Yeah, so given the current profile and the current upbeat mood around rural India, I think Dabur should be the biggest beneficiary of it. Good summers have also aided sales in Q1. So I think as sales grow from here onwards, you would largely be focusing on volume growth. The company is diversifying into a lot of new products, expanding their total addressable market. But in FMCG, it's a slow-moving process for new products to gain market share. But they have entered into 5-6 new segments totally for them. And I think if they can pull it up there and grow it at a substantial rate, it would be very healthy for them. And even the distribution reach has been enhanced on all counts. On the broader aspect, it's around 20-30% increase year on year. So I think that should also start playing out in the numbers. Regarding top brands being there, I think they have a strong brand presence. The only flip side could be that, considering the current numbers, we are expecting about 15-16% kind of growth. And it is already trading at 40 times forward. So I think considering that, it seems fairly valued. If you want to add more add-on dips, and at the current price, I think at best you can continue to hold. I can't see much upside if you're holding for a 1.5-2 year kind of horizon, only market-linked returns. But if you want to look at beyond that, I think as the new products start contributing, and that is the time frame you should be looking at, If your view is just 1.5, 2 years, I think it's better to exit at current prices. If you can extend your horizon, I think continue holding this and add more on a tip of say anything between 5 to 10%.
Okay, all right. And technically, what would your approach be towards Dabur, Rajat?
You can do two things. Dabur, if it comes down close to about, say, 610, put a stop loss below 598 and buy more. Otherwise, if it were to go up and it crosses 664 or 665 kind of levels, then you can consider buying, because that is a very strong resistance level in my reckoning. And once the stock reaches those levels, you will see supply is definitely going to come. Once that supply is absorbed, then there could be further upswing. As such, I quite agree with Sharad that it is not showing much of attraction and a strong uptrend potential. It is just about catching up. Only above 665, you will see fresh gumption coming.
Okay, all right. So that's on Dabur. In the past 6 months, the stock has given returns of around 16% odd. We now have Krishna Rao, who writes to us from New Delhi, holds 400 shares of Tata Technologies, which is bought at around 1150. So sitting on a loss there, wants to know the future prospects of his current investment. Well, technically, what would your approach be towards this particular stock? It's not done much in the past 6 months. It's given it's down around 12 odd percent and is down 13 odd percent this entire year. So, Rajat, your approach towards Tata Tech?
I would suggest holding on to the stock and do not get out of it right now. Wait for medium term, that is at least 6 to 9 months. You are definitely going to see some kind of an appreciation, because this is forming a base between, say, 1050 and 975. This is the range in between. It is absorbing supplies. Once the supply is absorbed, then it will move up. And once it crosses 1125, then it will get more momentum. But here, you should buy. It is not the time you should get out.
Okay, so you should buy and not the time to get out. What would you share that view, Sharad, in terms of the fundamentals? The Q1 numbers weren't that, didn't impress too much. So what's your view?
Yeah, I think the Q1 numbers were not there, but I think the type of technologies the company is focusing on, whether it's electrical cars, autonomous cars, these are not things that would show up every quarter on the numbers. The VinFast, one of the concept most probably has got approved, and you would see the result in the next quarter or the quarter after that. You'd see some effect of that numbers. More of the impact would also be visible in the second half. They have done a JV with BMW also. I think the type of businesses the company is into, and the big trigger could be aerospace also, considering that they have major business from Tata Group itself. Tata Motors and the auto business continues to be a major driver. The aerospace could drive it further. So I think it's an interesting bet long term, maybe not priced to perfection at these prices. But around 1000 rupees, 1010, I don't think you should be considering to sell it off. Rather, if you have more funds to allocate, you could allocate 50% here and 50% gradually on a 10, 15 per 20% kind of dip if the stock does get that. But I think long term, it's a very structurally strong story, and forward numbers could get a lot of leg up from the developments in the aerospace industry, as well as further models being developed on the electric side for companies like VinFast. And I think traction should come into those businesses over the next 2-3 years. So it's a good hold at these prices. Now there's not as much fancy as much was there during the IPO time. So gradually try to accumulate and build a position here. I think this is a very futuristic company, and once the aerospace business starts kicking in, you could see a lot of re-rating happening to the numbers.
Okay, all right. That's on Tata Technologies. So both have a view that this might actually be the time to add on to the stock and long-term positive there. We have some news coming in on Embassy Office Parks. They've leased around 1.4 MSF or million square feet to Commonwealth Bank of Australia and Bengaluru. So positive news coming in on that particular counter. But now we do have Mayank Uttam, who writes to us from Mumbai, who's 13 shares of Bajaj Finance for an average price of 7,000. So he's sitting on a loss. And he's holding it since more than a year and a half. He wants to know what to do. Well, what is your technical view on this particular counter, Rajat, on Bajaj Finance? If you see, it's flat today, but nonetheless, do you think that it could probably get back to the the buy price at least?
One thing that is happening is that Bajaj Finance posted a top around say 8,000 in 2021, and after that it has been range bound. Mostly the range is between say 6,000 to about 8,000, and so far, so long as the range continues, you cannot say something like say if you look at the weekly chart of Asian Paints, that is also a range bound counter. And here also in Bajaj Finance, when you look at the weekly chart, the same thing is there. So if the horizon is short term, then I would say kindly hold on, because if it were to cross 7,000, then you may see 72.40, 72.50 kind of range being scaled up. Then you can think of exiting. Otherwise, if you are a long-term investor, put a stop loss below 6,000 and continue to hold on, because this company might be absorbing supplies at these levels, because the instructive chart is Bajaj Auto. There had been several years of range-bound activity, and after that, when it shot up, it gave very good appreciation. And same thing might happen here going forward, but that is for the long term.
Okay, all right. What about you, Sharad? You know, in terms of the numbers, the loan loss provisions jumped this time round. The NBFC is going to focus on collection efficiency going forward. But fundamentally, do you think that this is a portfolio stock to have in your in the long term, and it'll revisit those highs that it saw a year ago?
Yeah, I think might not be as optimistic. Last 3-4 years hasn't done much, because it was largely trading at 10.5 times price to book, and right now it's trading at somewhere around 5.4 times. I think the business has done very well for Bajaj Finance right since the reorganization happened, and over the last 10 years they have done very well regarding the business growth. Everything, GNPAs, NPAs have been very much under control. The fee income has been robust. The only thing is that I think maybe that this legacy business that they have grown over the last 8 to 10 years, specifically the consumer finance business, we might be seeing a bit of slowdown there, and new competition might kick in from banks and other smaller NBFCs, and it might not be as easy for them to continue growing. Now the base is also much larger. But last 3-4 quarters, you don't have any thing to believe that the Bajaj Finance as a company is slowing down. New ventures, whether the asset management business, etc., is also coming in. And I think long-term trajectory should be strong for consumer finance, housing finance. All these should play out very well for the company, and they have largely focused on technology. In terms of valuations, I think if you were to take a generic view and it continues to trade at similar valuations, 4.5 to 5 times, then maybe you're looking at 7,500 kind of targets. But this is based on the fact that earnings has been revised downwards over the last 3 to 6 months. In case the bank's numbers improve, then your optimistic targets could be around 10,000, 10,500. So keep this range in mind, 7,500 to around 10,000. Maybe over the next 1.5 to 2 years, you could get those prices.
Okay, all right. So that's on Bajaj Finance. Well, for the markets, it's still quite quiet at this point in time. So overall for the indices, the Nifty is just about higher by around 42 odd points. The sensex is down by around 4 odd points. Advance decline ratio is holding on the advancing side. So that's a positive which is playing out. We'll take a short break. More queries. Stay tuned. Welcome back. You're still tuned into Your Stocks. Well, do watch out for a stock such as Dishman Pharma. It's doing extremely well today. It's up around 10 odd %. That stock has not done much this year. It's gained only around 10 odd % and it's down 6% this month. But today it's having a good day, so it's seeing a good amount of volume as well as price action on the upside. Dishman Pharma is the one that I'm talking about. But let's get another query now. We still have Rajat, Bose and Sharad Avasthi to answer all of your stock questions with us. We do have Sunil, who writes to us from Cochin, holds 200 shares of Cochin Shipyard at 2,721. He wants to know what to do, whether to hold or cut the loss and redeploy his particular investment. Well, he's sitting on a loss at this point, and it's quite a steep one at that. Sharad, I'm going to toss it over to you. What would you recommend in such a case?
Yeah, I think what has happened in the whole space is that, the order books have doubled over the last 2-3 years, while at the same time, profits and revenues have grown by 15%, 50-60%. But the stock prices have gone up by 6-7 times. So I think that's been the case in this also. Cochin has seen a decent correction, but I think if you look at the numbers and the type of order book they're already sitting on, the only thing is that the performance may not be linear. So you might see some slowdown in some quarters or even a year maybe where you don't see much happening in the numbers. But the order book accretion should continue, whether on the domestic side or on the international side, particularly on the oil and gas as well as on the shipping and marine business, submarine side. So I think all this should augur very well for these companies and even for Cochin. Short term, if you're just holding it for 1.5-2 years, I think maybe you might not get much. But I think ideally after this kind of run up, you should extend your horizon to around 3 to 4 years. And there is a high possibility that the way the order book has doubled over the last 2 years, there is a possibility that it might further double up over the next, 1.5-2 years, depending on international as well as domestic orders. And that would certainly give a big fillip to the forward numbers. So there is, if you can hold for that kind of time frame, I think my targets would be somewhere around 4,000, 4,500 on the stock, considering they trade at, 30-35 kind of forward multiples and the order book doubles. But if you have a shorter time horizon, which is say 1.5 or less than 2 years, I think it's better. I don't think you make much money out of this from that perspective.
Okay, all right. And what about you on the technicals, Rajat, on Cochin Shipyard?
Cochin Shipyard on the weekly chart is, it has completed its parabolic run, and the top was around say 3,000. After that, there is a 30% fall, and now there could be a bounce back. In that bounce back, if it doesn't cross 2,450, 2,500, then there would be further fall. In fact, this kind of pattern, when they show completion, after that, you will have to wait for a very long time. In some cases, it could be 7 or 8 years also. And this business, particularly defense business, lumpy earnings. So you get in the last quarter payments or even orders, and then your working capital cycle is very big in some cases if government doesn't have much money. Now the losses are much smaller, so he should exit and look for better opportunities. This is not going to produce major appreciation, at least not before 5 years.
Okay, all right. So that's on Cochin Shipyard. Well, we do have time for another query now. We have Durai Samraj, who writes to us from Mumbai, holds 1,000 shares of NCC, which is bought at 273, is a long-term investor and wants to know what to do, whether to hold or sell this particular counter, sitting on a good profit there of around 48,000 rupees. So Rajat, what's your recommendation on this?
You said the gentleman is making good money, right?
Yes, on NCC, his buy price is 273. He's sitting on a profit of around 40,000.
He should book profits immediately, because even this is already on a parabolic path. And once the fall starts, then he would not be able to exit, because then his buy price will be taken care of by the downswing. So right away, one should book profits.
Okay, so no further upside from here on, but you believe?
Not much upside from here possible. I don't think so, because currently it is at 322. It would hardly go to 340. Before that, again, some selling pressure will come. And once it takes out 290, 280 kind of support area, it can go down to 240. And at that point of time, this gentleman will not sell, and then it will become a permanent member of the family. That is.
Okay. And what about you quickly, Sharad, on this one?
Yeah, I think the order book growth, etc., has been very good. We don't see any kind of slowdown on the infra spend, etc. Yes, I agree with Rajat that maybe median valuation wise, this is where he could book profits. But considering the type of mood we have around infrastructure, I think, and the type of order book growth that these companies are looking at, you could expect, very rapid growth in earnings, and that could translate into a slightly higher multiples. So I would think that you could hold on for targets of around 400, which is 20 times. So I think that's a possibility over the next 1.5 to 2 years.
Okay, all right, Sharad, as well as Rajat. On that note, we're going to wrap up. Thanks very much for joining in and taking us through all of those queries. That's all the time that we have in the show. Do remember to email us your questions. We'll address them with our experts. Closing bell up next.